Will interest rates ever come down?
Get the crystal ball.
I don't know how they don't. How far do they come down? It depends on a lot.
Unlocking Saratoga's real estate secrets. Welcome to Selling Saratoga, a podcast about the real Saratoga real estate scene in one of the Northeast's hottest and fastest growing markets. Our listeners are going to gain expert insight on the best ways to make decisions about home improvement, investment, design, buying, selling, and everything in between.
I'm Helen Maciariello.
And I'm Noel McLaren. Together, Helen and I have the keys to your future in Saratoga real estate.
On today's episode of Selling Saratoga, we are going to cover market trends, real estate horror stories, but first, we're going to talk to Mike Maciariello, who is here with us from Hunt Mortgage. Welcome, Michael.
Yeah, thanks for having me.
Thanks for being here.
Hey, super excited.
Mike's here to enlighten us about all things mortgages, right? He's going to talk to us about how mortgage rates are impacting real estate in Saratoga and beyond. And he's also going to get into the all-important hot topic of interest rates. I know a lot of us want to know.
Yeah.
All about that. We also have Heidi here today, back with us. Heidi,
hello,
welcome back, our
thank
featured
you.
Thank
Thank you for having me. I'm so excited to go over the mortgage business.
Yeah. And Heidi tends to spice things up a little bit.
It's super organic though.
Yeah.
Yeah. But that's what I love about Heidi.
Yeah. Are
Whatever
you ready for
pops
my
in her head.
surprise questions?
Yeah. No, we're in Saratoga, which seems like an organic kind of town. So having organic questions is wonderful. So, no, we can certainly answer any questions that you might have. Hopefully.
Bum, bum.
And just so everybody knows, I have worked with Mike at Hunt, and a lot of times when I am feeling the gloom and doom of the challenge in the market today with lack of inventory and those high interest rates, Mike comes in and shares his wisdom and makes everything seem happy. That's why I really wanted him on the show today.
Hunt is a company that was established out in Western New York, in Buffalo, in 1911. Is that right, Helen? 1911. Yes. By the Hunt family. And there still is a Hunt family who runs the company. And we are a fully integrated real estate service company. And that means not only does Hunt provide expertise for you when you go to buy a house or list your home, but we provide services that will answer all of the questions around the purchase of that home. So what I do is on the mortgage side. We also have a title company out in Western New York. We also have insurance.
I'm going to give you a little bit of a compliment right now. Most mortgage people, I feel very comfortable and warm and accepted and loved by real estate agents. But when I talk to somebody involved in the finance end of things, when it comes to real estate,
not so much.
I don't know. I just feel intimidated. I feel like I'm going to the principal's office. I don't feel that way with you. I mean, how do you think you got that way, or what's kind of like a tool?
Well, I've spent a lot of time in the principal's office, I think. So,
and you didn't want to make other people feel that way.
No, and actually, I really used to enjoy my time in the principal's office.
Oh, God.
So they didn't always enjoy it, but
Oh my gosh.
So I don't know how we're the comfortability of it, but thank you for that. And, real estate's an important topic. It's important for us to be able to have open, honest conversations. For me to help you the best, or you the best, or you the best, no matter what that is, whether you're a buyer, whether you're a real estate agent, whether you're have questions, is for me to be able to have honest and open conversations to understand what it is that you're looking for and what it is that we can help you with. So I always like to enter situations not knowing. I don't want to give you an answer without knowing what you're looking for.
Transparency.
Right? Yeah. So we're always trying to look to find what questions you may have, or find what problems we can help you solve. Right. I believe that fully. Us as sales professionals, you guys as sales professionals as well. Our job isn't to, answer your questions. Our job is to help you find the questions that you need answered, and then provide the answer to that. And that takes, open dialogue and a lot of listening and a lot of conversations. So, which is how we like to approach things, and to do that with a nice, light, comfortable way is best.
So, having said that, I think we should get into the uncomfortable details about what's going on in this market. Because I just want to blame the feds for ruining the housing market because of such high interest rates. And that's probably the economics behind it all. It's just that the logjam of people not being able to sell their homes because they can't find their homes, first timers can't find a house, and the middle of the roaders can't move up to free up the market. Can you explain a little bit about why that happened in the first place?
Well, first off, I'm not an economist.
Okay, fair enough.
Although I do play one on TV from time to time. Okay. But I'm not an economist, and my understanding of the market is just from my experience and what I see on our side, which is, what's going on with interest rates, what's going on with the inventory. Why are interest rates high? Why have we gone from, in 2021, very quickly from interest rates in the mid twos to high twos, all the way up to, we got up to writing interest rate, writing mortgages at 8%.
It's alarming.
Yeah.
8? I thought it was 7.
I say we very, very few at 8%, but there were mortgages written near that 8% mark. We're back down under that, thankfully, and we see a trend that should continue with the lowering of these interest rates. We all hope that it'll come yesterday, right? Yeah. But it looks like it's coming tomorrow, not.
Well, and I am aging myself, but when I bought my first house, the mortgage book started at 10%. It was double digits. Yeah. It went 10 up to 14. So it is not exactly.
As a millennial, I don't like hearing these things.
Well.
That was that was the norm.
I know, but it's like it's hard to hear,
So why have interest rates risen? The simplest way to understand it is we have a term that everybody hears, which is inflation, and that's a term that gets thrown around. And the simplicity of what inflation is just means what I'm buying today costs more than what it cost yesterday. So my dollar doesn't spend the same way. It takes a little more. We all experience that with a lot of things, right? You go to the grocery store and maybe milk's
gas
a little more expensive.
I know.
Restaurants.
The most expensive investment of my life right now is fruit. My boys eat. I'm sure you experience this too, Heidi. we go through blueberries, grapes, raspberries, strawberries, and that's my biggest.
You go to a Chipotle. It's $15 for
McDonald's. Is not the Happy Meal.
Crazy.
I don't even know what it is now, but I was alarmed.
Yeah, who's happy with a Happy Meal anymore, right? And it's expensive. And so that's what inflation is. Inflation just means that things cost more, that everything costs more, that the value of your dollar doesn't quite stretch as far, and everybody sort of feels that. And why does interest rates play into that? Well, the Fed's job is to lower inflation, is to soften inflation, is to weaken, is to slow that. And they don't have very many tools. The Fed only has a couple tools to do that. And one of those tools is they can manipulate their interest rate. They can raise it. They can lower it. And the rising of the interest rates and making money a little more expensive, the theory of that is people are going to spend a little less money. So to think about it, the only way for us to stop prices go up is to spend less money on those things, right? And to do that, the interest rates go up, money gets a little more expensive. It slows the borrowing, it slows production, it slows a lot of things. And again, I'm not an economist, but that's the basics of it. The higher the interest rates, the less money is being spent out there, the more prices will come down and come in line.
But it seems to me that it's driven up the cost of houses. It's just completely skyrocketed.
Yeah, that's a reaction to interest rates, but not like you thought, right? So everybody, when interest rates rose, everybody used to ask me on the mortgage side, they go, geez, people aren't even going to want a mortgage anymore, right? It's 6%, 7%, whatever that may be. And that's not the case. People are still lining up for mortgages. They still want to buy homes. The sheer number of people out there with mortgage rates that start at under 4% is very high at this point. I don't know if the numbers were 50% or 60% of the mortgages out there are all under 4%. So when people are making a decision as to maybe we'll list our home, maybe we'll buy something else, it's, well, do I want to give up this interest rate? It's become a form of currency.
Handcuffs.
Social currency too, right? Everybody who doesn't love to sit around with their friends and go, I got a 2.5% interest
Well,
rate.
yeah,
right? I mean,
and I
that's
also
pretty
feel
cool.
like it makes you feel like we had talked about. It makes you feel a little bit stuck, whether you went into buying a home thinking this was your forever home or
Right.
just a temporary for now home. You don't want to give up that good rate if you have one. So then people are not going to move. I mean, if you are in this position, are there other loans that you can get to improve upon your home if we're not going to get a mortgage per se? But hey, you know what? Maybe I need more space or another bedroom because my mother-in-law is coming to visit, or I have another kid and I need to finish my basement. Is that something? Is there another alternative if we feel stuck?
I think it's interesting too because right when interest rates were low and it was so easy to get money and houses are going up, we treated our homes like we treated our cars, like our computers, like everything else in our world, which is just a replaceable thing, right? We don't fix things anymore, we replace them. And that was very much how we would look at our homes. We go, geez, I could do a new kitchen, I could do a new bathroom, but let me just replace it, right?
Yeah.
And so the ease of replacement has sort of gone away. So there's people who are in their homes are looking at other options for sure.
What are they?
You have options where you can do a second. You can do a home equity line of credit. You could do a home equity loan to take money out. One of the beautiful things, at least in our area, and prices and values are all regionally specific, right? So when we talk about our housing market, this is our housing market.
Right.
Our housing market has seen appreciation that has not stopped and it has not slowed down. And your home is worth more today than it was yesterday than it was last year. That's not necessarily the case maybe in every market, but it certainly is in ours. You can take advantage of the equity in your home to make some improvements in your home. And you may find that that's easier to do because maybe the access to money, maybe the access to properties out there, but people are investing in their homes a little more in a little different ways. Things like take out a home equity line of credit or a home equity loan. We see actually people dipping into their retirement as well, borrowing on their retirement or borrowing on their investment. So people are getting a little more creative into how that they can access, capital to improve their homes.
So you talk about, being able to do some upgrades to your home, remodeling your kitchen, bathrooms, maybe an addition.
Yeah.
I'm hearing from customers, clients, that it's actually hard to find contractors. So there's like a 6-month wait or longer and so on. So maybe doing those upgrades are not even an option. And what would you actually say to a possible seller, a client? Here's the reasons why you would want to put your house on the market if that is not an option, even though you have a 3% interest rate. Now you're ready to put your house on the market and sell it. What does a new purchase look like? What's the price point maybe you could actually buy another home and your rate is higher, but you're getting probably still a little bargain. It's a headache right now because there's not enough properties for our buyers. So what would you say to somebody who's toying with the idea of, handing over their home that has a 3% interest?
Yeah, I think you certainly have to factor in your current payment, your current interest rate, but that's not a stopping point, right? That is a point of, okay, this might be important to me, but you need to look at your whole picture, and interest rate is part of the picture.
Sure.
Right? So yes, maybe your interest rate's going to rise. But the value in your home, do you know the value of your home? Do you know what the impact of that looks like? Even if you want to move, do you have to use all of the money for the move? I mean, you have options, right? So one of the great things is, this housing shortage and the problems that we're having in the housing market, they're different than we've ever had before. So we think about maybe we have less options. And what I would tell you is there's so many options out there for structuring your next purchase, to structuring your future, that if you're thinking about it, don't stop at, well, my interest rate is 3%. Well, that's great.
Right,
Yeah.
because say you have a house that's worth $500,000 and your rate is 3%, and an opportunity did come up, and maybe the house is the same price point or close to it, and your rate is going to be a little bit higher or whatnot. It's still, maybe their payment would be just a little bit more, Is that like an accurate assumption? I'm not in the mortgage business, so I'm not going to pretend like I know. I stay in my lane. I'm a realtor.
It's intimidating.
So I'm curious, like if people are like, oh, I'm not giving up that rate. But what does that mean? What does it actually mean? Would your payment is it affordable?
Well, I think the first question you always have to ask yourself isn't, whether it's affordable, is, okay, I'm looking for a change. Why am I looking for that change, right? And what's the impact? What's the benefit? What's the impact on my life with that change, right? So, and then you start looking at, okay, is it going to cost me a little more? Maybe it is. Maybe it's not. It could, if you're talking about, I'm going to borrow the same amount of money at a higher interest rate. Yeah, I mean, it could cost more.
But maybe the home is like 1,000 square feet bigger. So there's those things that you have to consider. Is it going to be better for you, your family?
But maybe also the equity that you've built up in your home, moving that forward, if you throw that on the mortgage, it may not, it could be a wash, it could be close, but at least you're living in a house that you want to live in instead of picking up
100%.
the
And I would tell you, a lot of these conversations are best had with, what do we do with the equity, right? What do we do when I sell my home? What maybe taking all of that money and putting it down on your next home isn't the smart choice, right? Maybe we should talk to not just a mortgage professional, but a financial advisor and say, geez, what if I've got X amount of equity? How much should I be putting down on my home? How much is, and how much should I be putting into, a market? I can make money on my money, right? So the market has presented opportunities for people to make a little more money. Maybe your income's gone up. Maybe you're okay with spending a little more. But the question isn't, I don't want to get rid of my interest rate. It's, well, what are you getting rid of your interest rate for? That should be the question. Your house.
That's a great question.
I think what consumers really want to know is, will interest rates ever come down? Is that a reality?
Get the crystal ball.
Yeah.
I know we might not know the answer for sure, but what do you think, Mike?
I think historically, yes. I mean, we will see rates go up and down. The rates tend to go up and down. We had a 15-year, I forget how many years it was, of rates at 4%. Maybe under 5% to some of the crazy rates in the twos. But if inflation comes down a little bit, which was some good reports today, the European banks have cut rates. Do I think rates will come down? Sure, I do. I don't know how they don't. How far do they come down? It depends on a lot.
To that point, so many clients are waiting, quote, especially first-timers, for the rates to come down to hop in the market. Tell us why people shouldn't wait to get in the market.
So one of the interesting stats that I've seen lately that's really alarming and shocking, right? The average age of the first-time home buyer. Have you guys seen this? The number, the average age of the first-time home buyer.
Can we take a guess? Can we all take a guess?
Why not? You're not in the business, so you tell me.
I'm just, so first-time home buyer in 2024, we're talking about right
2024,
now,
today.
Oof, I would say right now the average age is probably 35.
Yeah.
Yeah?
Yeah.
Spot on. I'm just
yeah.
thinking of me, and I feel like my generation was like maybe some of the last that got in right after graduating college or getting their first job, getting those low interest rates.
Right.
So like but people who I'm talking to who are like just a few years behind me, they're like, I'm not buying a house, I'm renting,
Yeah.
which they hate, but also they're like, I'm never going to be able to afford a home.
Right.
I was going to guess 30, but okay.
Yeah.
I would have thought, again, because maybe we're a similar generation. When I was looking at buying my home, I was in my late 20s. Right?
My youngest client was 18.
Yeah.
Buying a two-family.
Which is awesome.
That's great.
Which is great. But you start seeing these numbers like 35 and 36. So we are delaying getting into homeownership. And when you think about what homeownership is, it represents stability for your family, stability for a lot of things, but it'll eventually be a cornerstone of your wealth picture, right? Is how do we generate wealth? And the earlier you're getting into homeownership is the earlier you start benefiting from right, everybody talks about compound interest in the bank. Well, what about compound appreciation, right?
Right.
What about paying down a debt as that debt goes up, and what that looks like? And if we're jumping into that at 35, it was 36, it went down to 35. To me, it was shocking. I again, not shocking to you, which is
I don't know why, because I just, maybe it's just talking to peers of mine and where they're at. And I'm seeing actually now more people in the generations beneath me saying, I'd have to wait forever to start a family, or maybe I'm not going to start a family because I can't afford a family. So it's scary. I feel very lucky that I feel like I got in right before all this. Do you think COVID had anything to do with this too in the pandemic?
Well, COVID was the great divide of everybody moving from cities, but everybody came, and in all the small towns, out suburban places in the country. But here's the thing, people bought houses that they may or may not be happy with because they had to have a house. And now they're looking to move up, and there is nothing to move up to because those people aren't moving because of the interest rates. However, if first-timers are waiting for the rates to come down or for the home prices to come down, that's not a good strategy, because once the inventory opens up, everybody who's been waiting on the sidelines is going to jump in there, and it's going to be even more of a competition to buy what's out there. And you've waited, and now you're in competition with all those people who waited.
Is that silly for Gen Zers who are thinking about, I am working my way up to this home purchasing opportunity, but I'm not ready yet? What is the sign that you're ready, and should they not be holding back and maybe take a leap of faith? I mean, what is that moment?
Talking to a realtor, just even if you don't think you're ready and you think you might be ready in a year, 6 months, 2 years,
Absolutely.
Don't guess. Absolutely. And don't use just Google either. Talk to a professional. Talk to, the loan officer, get the idea of what is it that you want to have saved. You don't want to be house poor either.
That's,
so you want to find like a budget of what you think you'll be comfortable with. What do you need to get there? And having your team behind you, getting those costs of what it would be lined up. Then when you're there or close to it, start talking to your realtor again, start talking to your loan officer again, create that relationship with them so that when it is time, when you think you're ready and you can re-collaborate, then you can start in the market. And the market's going to be different if you are ready down the road.
So set the scene now before you take action. Set the scene, wait a year, and then you have everything ready for when you want to jump into
And of course, that's only if you're thinking about something down the road. You might be ready now and not even know it. Like, oh, wow, I can afford this.
More ready than I thought.
The very first step is a mortgage pre-qualification. And
Wanna talk about that?
Yes, talk about mortgage pre-qual is a letter that you need if you're going to make an offer on a house. It gets attached to the purchase contract.
Yeah, I think, certainly when you're ready to start discussing whether or not you want to get into the market, you got to ask yourself, can I, right? And that starts with a conversation with a mortgage professional, with a loan officer, or your local bank. And it starts with, a pre-qualification, a pre-approval. And what is that, right? It's just basically, we're going to come in, we're going to have a conversation with you, we're going to gather some information, we're going to find out about your job history, about where you've lived. We're going to look at your credit to make sure that your credit is where it needs to be. If it's not where it needs to be, we can give you some guidance as to where,
which is amazing,
how to get it to where it needs to be, and we'll actually analyze your debts. How much house can I afford? It's a question that, what you think you can afford and what I can approve you for are going to be two different things, and they're always going to be different. Whether that is I can approve you for a lot more than you think or a lot less than you think, either way, it's you should know what your buying power looks like, how much money I might need for a purchase. You might be surprised; it might be a lot less than you think. Mm-hmm. And what I can afford in a monthly payment.
I want to just say too, if that's okay.
Yes.
I would say it's really important that if you are unsure who to talk to, talk to a realtor, find the realtor that you think that you might connect with and work with, and ask them for a recommendation, because you really, in my opinion, You want to work with somebody who's local. You don't really want to go online and say quick qualification because they're usually frowned upon. If you put an offer in and you have, I'm not going to say XYZ from a online source pre-approval, a lot of times they aren't taken seriously when they're in multiple offers, okay? The agent is looking at the offers with the seller, and if there's one from an online source and it's comparable to one that's in front of you that is a local lender, they're going to probably go with the one that's a local lender.
That's a good piece of information.
And here's the reason why. Anybody who's seasoned, a lot of times those loans don't close. And so you've wasted the seller's time, you've wasted the buyer's time and money, and then you have to start the process all over again with somebody who's local. So please just do yourself a favor and ask for recommendations, somebody locally, if you don't know who to go through.
Yeah,
And
local licensed.
I'll jump on that bandwagon because Heidi is 100% correct. There's so much regionality, even up here in Saratoga Springs when we do a loan. If you have a local team, an attorney, a loan officer, a bank that's local, we're far more comfortable with offers that have a local team.
Well, and also I'm over here acting like shocked, like, oh, really? But at the same time, the way you just explained it, Helen, too, it really does make sense.
No, I would say, too, is it's important, we're state licensed, we're state regulated, we're regulated by Department of Financial Services. I need to, every year, get my license reapproved. We are licensed from the New York State Banking Department in New York, in whatever state you're going in will be you'd be licensed in that state as well. So there's federal background checks. We've been vetted on a higher level than maybe somebody that you might deal with online, where you're just calling and getting
The knowledge you have to have is insane. Like it's
That's
constantly
true.
changing. And how long have you been in the business?
Well, geez, I started back in 2008 was my first introduction into the mortgage business. Yeah.
For me, I think the most important thing about having a loan officer that you know is the same reason why you have an agent that you know and love. You can call them night and day, and they pick up the phone, and you'll get the same person over and over again with the same expertise who care about you and want you to get to the closing table. If you're online and you're going to 800 numbers and whatever in the sky, you may or may not get the same person. I don't exactly know how it works, but
It's frustrating.
It's peace of mind to have somebody on your team. There is a team, and you're part of it.
So you heard it, listeners. Get somebody local. Don't go online.
Ask your agent.
Or if you're confused, because there are also a few local lenders, which local lender works best with your agent or with this,
This particular
home
buyer.
this buyer in particular, because that's the offer they're going to take.
You should work with somebody that you're comfortable with, right?
That's
And
correct.
I always hope that's me, but it's not always, right? Honestly, it's
You
not,
could be annoying.
well, sometimes.
God.
Yeah, I can be. But it's you've got to find somebody that you're comfortable with, that you're comfortable with dealing with, that you trust yourself, right? So that's
So you're playful. You guys have like a relationship,
Yeah.
so that's something to keep into consideration when we're working with an attorney. That's the team we're talking about when you're buying a home.
some people don't want playful. I've actually gotten in trouble for that.
Yeah, some people
You're
have
right.
no sense
That's
of
why-
sarcasm.
You're
That's
absolutely
true.
right.
That's why you
Absolutely
talk about
right.
the right match.
Yeah.
Oh, we talked about this. We did a whole episode. Our last episode with Heidi was all about finding the right real estate agent match. It's like matchmaking. I didn't realize it's the same when it comes to mortgages.
Well,
too.
it can be. I mean, I remember years and years ago, I worked with a married couple, and I had the conversations, the back and forth was very lighthearted with one of the two, and when the review came back, it was I was shocked that the other side was like, well, it was a little maybe too lighthearted for the other side.
Was it me and my husband?
Oh my God.
Could have been. Yeah. Either way, I clicked well with one and not necessarily, and surprised I didn't realize not with the other. But whether you're buying a $80,000 home or an $8 million home, it's a big deal, right? It's a big deal for you. And you should be comfortable, knowing who you're dealing with. There should be a comfort level with all parties that you're dealing with.
You talk about this being a big deal. And I've asked this question of, I know Helen, maybe Heidi, but what's it like holding this big responsibility in the palm of your hands?
You get really invested in this because of the impact that you have. And I know the impact of that this home purchase is going to have, not just in today, but in the future for these people. When you're buying a home, you don't just tell your spouse who you're going through with, you tell your kids. and you tell your coworkers and you tell your parents and you tell everybody around you that you're going through it. You're not just there to make sure that you're protecting your immediate clients, but they have a whole bunch of people that are looking at them and relying on or have made plans on that next thing that you have given them hope, the ability to move forward with, that you have had them start making plans. It's important, and you should that weighs on you, especially when things go go sideways.
Weighs heavily.
Right?
The stress and anxiety that our clients have going through the process, we're part of it. We hope to alleviate as much as we can, but it is emotional and tough and not easy, because it's usually the largest purchase in your future, in your generational wealth.
Have you had any visceral emotional reactions from people, positive or negative, like hugging you when things went right and becoming friends? I know you've experienced that, Helen, or just sobbing, what?
So it builds up, right? I mean, you guys can appreciate this, right? You start with looking, and then you find a home, and then you go to get a mortgage, and it builds up. So at the end, you get like this part of this release, right? There's just this release of, we did it. We made it, and it's really rewarding to be a part of that. But to be part of the pressure valve that goes off, like the
that
pressure
clear
cooker
to close,
when
the steps, the process. When you're a buyer and you're going through the steps with your realtor, and I'm very hands-on, okay, we're here, when we're getting to the mortgage process, and it's almost like it's up to you to help them get through all these steps. And of course, I'm in the middle of it, talking to them about, okay, we're here, kind of making sure that they're getting touches from both of us or all of us throughout that process once they're under contract. And so getting to closing and you sending us the clear to close message and setting up the walkthrough, that is just the most rewarding, and becoming friends and so on.
We're huge problem solvers. There's so many, not always problems, but just blips on the radar that come up, and it is just you have a problem, we have a solution, but we need a team of people who will help with that. Well, here's a fun fact that people don't always know about, that we know about, and that is when people sell their house and the prices, of houses have gone way, way up, and sometimes people have an appraisal before they sell, and sometimes they don't. And then there's multiple offers, and the house goes over asking, and that's great. Except when the person buying the house is taking out a mortgage, the bank sends out an appraiser, and if that appraiser doesn't agree with the purchase price, well, that's a huge problem, because you have to either renegotiate the sale price, that asking price, or either party can cancel the deal. And of course, the question would be, well, heck, if I had multiple offers and 4 people wanted to pay $50,000 over asking, why should the bank say it's not worth it? Do you want to take that? It's a toughie, because it's not the bank's fault, but the bank is looking at it. If you go belly up, how are they going to cover their portion of that?
Yeah. Well, there's fortunately in the market that we've had, we have not had a lot of homes that have underappraised. At first, we did, right at the start of the craziness. When COVID just started, that there was a little bit of houses underappraising. But a bank requires an appraiser to go out and say this is our professional opinion of value, and that's what the bank uses. They use the lower of the appraised value versus the purchase price. That can throw some things off for sure. There are strategies around that. If you're fortunate enough to be putting enough money down, there are ways to do that. Even with offers, right? So that's one of the things when you're making an offer now, the competitiveness in this market with offers. It's not a bad idea to discuss an appraisal gap strategy moving forward. Saying, look, I have X amount of dollars. Yeah, what is an appraisal gap?
Appraisal gap
strategy.
An appraisal gap strategy. This is not even on my radar.
It's pretty simple. It's like, the home's listed for $300,000, and I'm willing to pay $330,000. And I'm also willing to say to the seller, hey, as long as it appraises for the original $300,000, I can cover the gap between what I'm buying it for and what it appraises for whatever that gap might be. Maybe it's $5,000, $10,000.
Covering by putting down more money on the mortgage.
There's a lot of different ways you could do that. Okay. You could do it by putting more money down. You could do it by keeping the same down payment and just utilizing mortgage insurance, which is which is a bad word, but it shouldn't be. But so,
that was big a couple
No,
years
I'm
ago.
just saying, like, the terms that I'm learning on this show, I thought I knew quite a bit about real estate for somebody who's not involved in it until this show's creation. But, like, I need to start, like, a glossary now for people because, like, these are things that you don't ordinarily think of.
So maybe that's what'll get some of our younger folks into looking at
The
buying home is maybe we
ABCs.
can gamify it a little bit, right?
Oh.
Maybe this is like a game, right? Maybe you can sit down with your team and you can put together strategies and you can execute these strategies in a marketplace that's really tough to maneuver. It's not as straightforward as it seems. There's a lot of things to consider, especially in a competitive market.
So we do have to get to our other segments because we've been talking for quite a while. Mike, is there anything that you think we didn't ask you that you feel like listeners need to know about mortgages, lending, something that maybe is misunderstood when in the mortgage world? This is your moment.
I just think that it's important that when you're sitting there and you're saying, should I consider buying a home, right? I would highly encourage you going and talking to somebody and looking at the benefit, not just the short-term benefit, the long-term benefit of home ownership. Looking at creative ways that maybe you can become a homeowner. And maybe that looks different than what it looked for me or for my parents or my generation. Maybe it's not a starter home as a 3-bedroom, 2-bath ranch on a quarter-acre lot somewhere. Maybe that looks like I'm going to buy a multifamily where I'm going to be for the next 4 or 5 years. I've said to many people, they go, they say, well, I'm not going to be there that long. I go, well, how long are you going to be there? Well, I'm only going to be there 4 or 5 years. I go, well, then I'd suggest buying today, right? Quick, because let me show you the impact of 4 or 5 years. We can show you that. It's really simple.
Yeah, versus paying rent. Yeah. You could be buying.
Nobody's saying, yeah, absolutely, buy. But have the conversation to know, hey, is this a good opportunity for you? Could you buy? Or no, you're right.
And I'm not a rent shamer. Some people should be renting, but I think a lot of people default to rent. Mm-hmm. Because they just don't bother to have the conversation. There are options into homeownership that are easier than you think, that are more attainable than you think. The benefits are more impactful than you could ever imagine. And maybe that's still not enough to move forward to purchase a home, but you should know your options. And I think that the problem is we discount that option because we hear stuff like, well, rates are 7%, the houses are expensive. It's hard to buy a home. Well, you know why it's hard to buy a home? Because it's worth it.
Nothing worth having comes easy.
Yeah, home ownership is not as easy as they say it used to be, but it's more valuable than it's ever been.
The real estate world has a lot of negative vibes lately, and that's not necessarily the case. So that's why I think it's important that you do call and talk to a loan officer, which is something else that I wanted to ask you. So since I'm not with Hunt, us realtors listening want to know, like, do you work with other companies or just with Hunt?
Yep. No, we work with all other companies. We are, so we are part of Hunt, right? But we are a separate group within that. We are Hunt Mortgage. We are operated separately than Hunt Real Estate. We have a great relationship with our real estate company, but we are mortgage professionals for the people.
That's interesting and a great question, Heidi. So they work with.
I just want to make sure if I call you're not like,
no, listen,
you got to come work for Hunt. I'm going to be like,
no. If you asked me about Hunt, I would tell you what I think about Hunt and how wonderful it is. I certainly would tell you that. But no, but we're not exclusive to Hunt and Hunt agents. We don't. I promise you, we won't. We won't solicit you the whole way. No, we're going to encourage your business. Because again, we're all part of the same large, small. I mean, it's a large, small community.
Rather work with someone local than someone out there on the internet. Yeah. That's what I gathered.
Yeah, if you wanted to find me, if you're somebody who enjoys hanging out in the principal office, and, right? I mean, did we go back to that? No, but you should find people who you're comfortable and you're dealing with, and if you're not flying the Hunt flag, that does not.
Got it.
Restrict who we can work with.
Perfect.
Yeah.
Time now for our real estate horror stories. This is a segment that we do every single week where we talk about a quirky, interesting, weird situation that an agent, a consumer, a mortgage lender encountered when dealing with real estate. So, Mike, I want to know, do you have a real estate horror story?
The one that I keep going back to is I was dealing with some folks down south of here. I worked with the wife for months and months, right, getting them ready to buy a home. And they finally got a home. They got it under contract, and they were so happy. These were some of the nicest people that I've probably ever dealt with. And, you know, you're really happy for these folks. And we finally get it to where they're closing on their home. And this is their dream. And she used to tell me about this was her dream. She was actually buying a home. She was probably in her mid to late 40s at that point. She never thought she was going to be a homeowner. She was so excited about being a homeowner. Husband was a hardworking guy. He was a union guy. So he wants to close but just before New Year, but after the Christmas holiday. And
oh, tough. Oh,
not a problem, right? We were all set for that. And his company, because they're union, closed shop for 2 to 3 weeks to do whatever they do, retool their factory, whatever. But they take like a 2 to 3 week break. So we do what we call a verification of employment prior to you closing. And that is just basically we call and we say, hey, you know, is Helen still employed? And they go, yeah, she's still employed. That's how it's supposed to go. So, so this one, that's all we're waiting for is we just got to do a verification of employment. Well, doesn't the bank call his employer? And the answer they got was unlike any answer that I've ever gotten. The woman in HR who said, well, he is employed today.
Oh my God.
But what he doesn't know is we've lost the contract here. And we're all closing down. The factory's closing down. We're all going to be out of work, including me. I'm going to be out of work tomorrow, and he's going to get told this in like a week. Not on me, on the bank. And the person at the bank called me and said, Mike, you know, are they, you know, the question is,
yes or no?
The question is, are they likely, right? And you can answer yes, no, or, you know, we no comment. Well, she took it a bit of a step further. So here we are. It's just before Christmas. They're expecting to close in the next week. These people are so excited, and I'm sitting there going, "You want to know about a pit in your stomach, right? You're having to make a phone call like that phone call. That's a horror story." So
Scrooge.
I'm like, "Hey, your husband really needs to call his union rep,
Yeah,
like
that's a good way to put it.
Immediately." She's like, "Why? Is something wrong?" I'm like, yes, something's wrong. Something's wrong with the information that they've been provided. Call the union rep. So like they couldn't close, and it was devastating. Those conversations, like you talk about getting emotionally involved, those conversations are devastating to have, and it did delay things for a while. So at first it was crushing. It was just probably a terrible holiday for them and a terrible New Year's, but. In the coming weeks, their contract got picked up by somebody else. The bank was willing to, hold their approval open until he was back to work, right? And
so how long was that span of time?
well, it ended up taking about 2 months.
Oh, that's not terrible. I'm thinking
awful. That's awful.
Well, no, but tell that to a seller.
Yes.
The happy ending to that is we had a seller who was very willing to allow them to extend the contract,
sweet.
and understood. They were from. It was a smaller rural community, which is you tend to find folks in smaller rural communities a little more
patient.
But we were fortunate enough that they held that, and maybe 2.5 months later, they were able to close on their home, and she cried a little, which was great. And,
I mean, I would too.
Yeah. Those are the horror stories that we find on the mortgage side, but it ended well. So. Yeah,
that's great.
It was a good ending.
If you have a real estate horror story that you want to share with us, like we've really only had some from us and our guests because we're just getting this show kicked off. I really want to hear from our audience. So send us in a story on Instagram. You can also email us at sellingsaratoga@gmail.com. Send us a Facebook message. We're just dying to share that. And they can be anonymous. Mike's story was anonymous.
It could be funny.
It takes a lot.
It
can
be
be funny,
whatever.
Quirky. Send it on in. We definitely want to hear about it.
Time now for the market update, otherwise known as What the Helen in this market. So what I thought I would share today is just a couple of fun facts about the median household prices in some of the neighborhoods in Saratoga Springs and surrounding areas. Of course, the median is even different from the average. The median sale price of all homes in Saratoga is a whopping $791,500, which is a lot. However, in North Ballston Spa, the neighborhood's median price is $324,000. I'm going to round up the numbers. $324,700. In Country Knolls, which is closer to Clifton Park, $430,000. In Glens Falls, $283,000. Niskayuna, $319,000. And North Glens Falls, $341,000. So there's still humongous, spectrums in home prices. And last but not least, at a house that just came on the market today at $780,000, which is pretty darn close to the median price, at 14 Hyde Street in Saratoga Springs, $780,000. So it seems like Saratoga downtown is still holding its own. And that's our market update. Michael, thank you.
No,
Thank you so much
your
for joining us,
knowledge,
Mike.
your experience.
So good.
Yeah.
Thank you.
Great personality.
Enjoyed it.
And again, the fact that you've been in the principal's office so much makes me
Well-
feel less intimidated by
Well,
you.
that
so.
should. Yeah, that should. So
Will you come back and hang out with us
I'd
again?
love to, yeah.
And if people do want to get in touch with you,
best way is, you can call me, 518-414-2244. I will spare you the spelling Michael Maciariello, but we can put that in there somewhere. But my email is michael.maciariello@huntmortgage.com.
thank you so much for joining us, everyone, for this episode of Selling Saratoga. If you want to listen to us, you can hear us anywhere on Spotify, Apple Podcasts, and watch us on YouTube. And tune in next time. Thanks so much.
Yay, thank you.
Thank you.
Bye.